Hey everybody, just taking a quick look at the S&P 500 to just update where we are at after that nasty sell-off at the end of the day. This is the 5-minute chart we're looking at. Here was our gap up open today, and we took a run against this 3013 level. This has been a long-standing level of support and resistance that's been in our path since early last summer when we came off the June low. This was the first target on our list of new all-time highs. This was meant to be a first nominal new all-time high over 3,000. And I've always considered the all-time high that we actually hit finally at the end of July at 3028 to just be nothing more than a little overshoot of this level, because our next target up the list at that point in time was 3045. And now I just gave you a new set of targets last night in the note. I've been holding it back because I feel like, every time I put that list of targets out there, we find a top in the market and pull back. Sure enough, I posted it last night, and it looks like we're pulling back off of a high here. But now our next all-time high target up the list wouldn't be until about 3061. So really, there is 50 points in our pathway here if we could just get over and close over this 3013 level. But anyways, let's go back to what's going on here. So all day long we churned this 3013 level, and then finally we rolled over in the afternoon on news that the Brexit vote had failed to pass whatever the hell they've got going on there. I've completely lost track of what they're even talking about at this point. But in any case, it hit currencies, and that hit U.S. equities and so on and so forth. So we sold off down to a low of day initially around 29.98. So that was rough, taking a look below 3,000. And then, and you can see the RSI was very oversold. But we bounced from there, and what was really important was that we needed to bounce and we needed to retake 3,672, because that was our closing high that we made yesterday for the month and the quarter, our new closing high. So today, when we made a new intraday high, we had to make a new closing high. Otherwise, it sort of destroys the setup. There's a blog article that explains about closing highs and closing lows and how important they are for signaling exhaustion. So by not closing back above this 3006 today, that really signals exhaustion. Okay, so when our bounce couldn't even make the clearance of that level, we had one more leg down into the close. And then on this close, we wound up sort of stepping into a bearish engulfing state on the daily time frame. So really pretty much, a disastrous sort of close to the day. Thank God the bell rang, because if we had kept trading, I'm pretty sure we would have just gone ahead and gone deeply into this gap, probably filling it or maybe trying to fill it and reversing up, before finishing the job and leaving us in limbo like that. It does look like the market's headed lower after the close, because Texas Instruments reported and ES was trading all the way down to like 29.88 or something after the close. So here's what's on the deal for tomorrow. The 10-day simple moving average, which is moving very quickly, is going to be all the way up here right below this gap. I think that if we head lower overnight and gap down tomorrow morning, we're probably going to go ahead and fill this gap and look below it. Test the 10-day simple moving average, test another one of our edge levels at 29.78, and back test Friday's low. And if that's not enough to feed the beast, then we've got to get into these other gaps. The weekend video went into this in quite a bit of detail, so I won't reiterate those again. I just want this to be an update so you know where things are at. But if we get down here, break the 10-day and break Friday's low and get into these gaps, filling this gap is fine, this first gap that was left from last week. But what we don't want to see happen is get into this big gap here, this one that's left for us from Thursday the 10th to Friday the 11th, because all of the simple moving averages are in here. And like I said, the weekend video goes into great detail as to why that's so important. So anyway, I just wanted to go over where we are at. Another thing too, tomorrow, even if we come in and we trade lower and we tag that 10-day hold Friday's low reverse or whatever, if this psychotic market turns around and comes all the way back tomorrow off of a low to close back above 3,672, we will open up on Thursday and take out this high and continue our grind towards an all-time high. I've seen the pattern happen a million times. So I just want to put that out there as well. So as bearish as things look right now, if we reverse and come back and close above Monday's close, we're probably going to be grinding higher, probably going after 30.22 and maybe even 30.28 for Thursday. So just have that out there, have that in your head, and protect your profits, because you can make a ton of money on puts, but they reverse very quickly, and you see the premium just shrink out of those very fast. And Wednesday is an OPEX day, so be mindful of that as well. Okay, have a great evening. I hope this helps you figure out where things are at. If you have any questions, send me a direct message. Otherwise, I'll see you in the morning.